stock market is considered one of the high risk, high return. So risk is very high. So what are the factors when we are investing in stock market? We should know what is number one is the interest rates, then macroeconomy, government policies, then the political situation also. I'll run through what are the main do's when you are investing in the stock market. These are the things that you should do if you want to be successful. And the most important thing, how much should I invest in the stock market? This is the common question. A lot of people take the full retirement money and go and sometimes put in a financial institute, or they will go and put in a pyramid scheme and lose their money. And we see even though central bank educates the public, people are unaware of these investments and they lose all their money. But the time for them to grow and make their money, you have to have time. It's like a tree. You can't plant a mango tree tomorrow and expect fruits from the next month.
So I would like to invite Mr. Kapila Dodangoda to do an introduction about today's session.
In the first segment, we'll be discussing about, this is mostly for those who want to get into stock market, about what is stock market and fundamentals in investing in stock market, do's and don'ts, and also look at the stock market versus other investment opportunities, especially the fixed income securities, and a little bit of macroeconomic fundamentals which you may have to broadly consider when you want to invest in the stock market. So that is one segment of the presentation, and in the second segment we will be focusing on mainly investing in the Colombo stock market. So it will be we will be going into a greater detail, very specific areas, sectors and segments, and in the current point of time, what factors you need to consider and how you should be looking at the investments. So that is all what we are going to cover in the second segment. So therefore, you need to bear with us. So depending on which segment you belong to, but it's going to be, I'm sure, when you look at the two eminent presenters, it's going to be a very interesting session.
So it's my privilege to introduce Roshan. Actually, he's a good friend of us, and he's also was a member of our Rotary Centennial family. And I wish, when it's busy schedule, so he has taken a break. So it's time for him to rejoin Rotary Colombo Centennial. So about Roshan, he has a diploma in marketing from UK. He's associate member of Chartered Institute of Marketing. He has a master's MBA from Cardiff University, UK, and he's a chartered registered investment advisor in Colombo Stock Exchange. He has over 19 years experience in investment advisory and business development and strategy. He has operated in the capacities of providing advisory services to reputed government and corporate funds. He is currently employed in a leading stock brokering and fund management organization. And most importantly, he is the founder of MasterMind Institute of studies in and close to 2 decades of experiences in lecturing, and he has used his knowledge in sharing his knowledge and teaching and coaching with his passion for educate financial markets and entrepreneurship. So as a result of MasterMind YouTube channel, he has over 60,000 subscribers. I will wish and I welcome everybody to subscribe this channel also. And he started this during the COVID period, and he has got tremendous success. And I am very privileged to introduce, and I'm thankful for Roshan for accepting our invitation and addressing and giving this valuable session. Thank you, Roshan, and welcome. I invite you to start your program.
Good evening, ladies and gentlemen, and thank you, Randika, for the wonderful introduction, and thank you for inviting me to be one of the guest lecturers here, because when I was 2018, 2019 in the Rotary Club, I didn't imagine I'll be coming and giving a speech like this. And especially everybody's talking about the stock market, and I see that many of you all have got interested in the stock market lately because of the interest rates coming down. So as rightly like Kapila mentioned, I'll be running you through what are the fundamentals of investing in stock market and what is the macroeconomic framework Because when I spoke to some of you all, I was asking what's happening to Sri Lanka. We are all here having some hope that Sri Lanka might be a better country, otherwise we'll be not here. So I'll just run you through, I'm going to change the flow a little bit, because when I spoke to the audience, many were interested about stock market. If I talk about stock market, people wonder why. So let me start with a very interesting slide. Sri Lanka on the path to recovery. So it's a picture of Port City. So it's a positive image that is being put into to factor into the discussion. Then we see the economic aspect, or the recovery that we are expecting overall in by ADB. We are expecting in 2024 a GDP growth of 1.3%. With the IMF forecasting, we are expecting about 1.5, and World Bank around 1.2. I'll run you through some of these slides. Maybe at the Q&A or the panel discussion, I am willing to answer some of the questions. But to get an idea, why stock market? Why Sri Lanka? And why are we here still in Sri Lanka, being in the country? So there is always a positive impact when we talk about the positive sides. That is where we saw today. If anybody can tell me how many points the all share price index increased. Anybody raise of hands today? So 175 points. The turnover, anybody would like to raise hands? I saw one. The turnover for today's stock market has approximately 3 billion, right? So it's a huge transactions are happening. Before the IMF announcement came, we saw that some of the leading investors in Sri Lanka collected value counters at a bargain price, and already they are having around 15 to 20% gain. I'm sure that Dilusha will explain further with regard to some of those counters. So what we are looking at the macroeconomic framework, the increase inflows in remittances and tourism earnings is also increasing, as you see in the graphs. Tourism arrivals are seen. Now you see in 2020, it was 507,000, and gradually now it is 2022, 719, and up to June we have 624,000 tourists has arrived to the country already. So path to recovery, one of these factors are being considered a reason why the stock market to look good as well. The gross official reserves have improved 3.5 billion. You would have heard during the Aragalia time, we heard that there is no reserves in the country. But now there is at least 3.5 billion USD reserves. Then LKR depreciation, you see that how LKR depreciated. It shooted up from 202 to 364 at once, and now it has come to around 308 and floating around there. Then we look at the banking sector. The IMF DDO, we saw the banking sector had the minimal impact. So that is why we are seeing the stock market, the banking sector is moving. Then with the interest rates, what we should understand is stock market is a totally behavior with the interest rates. So you would have seen, I think most of you all would have locked some of your FDs, because if we have to talk a mix of, I always like to talk about mix of investments. I don't want to be biased towards one instrument. So if you look at FDs, anybody of you all who are able to lock your FDs at 20%, 25%, maybe you all are worried that some income tax person is here. Right, so some of the investors, prudent investors, was able to lock their FDs at 20-25%, and the balance cash they have kept in sort of a unit trust investment, which I explained further. So then what happens is when the stock market is about to rise, they take the money and come into the market before the market moves up. So the cycle is when interest rates are 25, people take money from the stock market and put back into the FDs at higher rates, which are getting 25 easily now. Some of the top billionaires, if you spoke a few months back, most of the money was parked in FDs, because 25%, sometimes even 30% return they used to get from these fixed income instruments. So any business, I think some of the entrepreneurs here, any entrepreneurs here in the forum today? You have one entrepreneur, we have one. So entrepreneurs know from your return on investment to get 30% is quite high, very, very hard in a challenging macroeconomic and business environment. So getting 30% some of the top businessmen put it just into the fixed income instruments and enjoyed, and their profitability increased. But now what happened is, gradually when the interest rates are coming down, the investors are looking for alternative investments. So the number one thing that we look at is the stock market and other related instruments. Then if you look at the equity market, we call the stock market. Now some of these ratios, some of the newcomers will wonder what is these ratios, but I'll run it through and then I'll explain again in my clarification. So if you look at stock market, CSE is the lowest PE ratio in post-war era. So what we see in 2010, we call it a PE ratio, we say 20.7, 2010. That means PE ratio, I'll explain what is PE. So generally if the ratio, PE ratio is lower, it is considered as cheap, right? It's like cheap. So if it's 20, it's high, because after the war, it went to about 20.7. 2021, we saw 13.6, and you see in July, 5.4. It has come, so the PE ratio, I'll explain what is PE ratio. That is where to take the overall earnings of the company and look at the share price. So at this discussion, if I go to calculate the PE ratio and show, it will take long time. So I invite, as Randika said, if you just go to MasterMind Roshan YouTube channel, you will find how to calculate the PE ratio. It's very simple arithmetic. I will try to explain further. Then if you look at the price to book value, I think there are financials and already people in the stock market as well, they'll understand what is price to book value. So something below 1 is considered cheap. So we saw 2010, the price to book value CSE has gone to 3.3, and now it has come in 2022. Earlier time it was very cheap, stocks was going very cheap at 0.9, and now around 1. So dividend yield is where the dividends are being paid. So while you are seated here, companies are making profits, and from their profits, part of it they distribute as dividend, and the dividend will automatically come into your bank account when you are invested in the right companies. So overall, equity is expected to provide higher returns on your investments compared to the fixed income instruments that is going to have in the market. Then this is a bonus slides that I'm going to offer you, because for the non-stock market investors, some of these slides will be very useful. Stock market education program, these are some of the programs that I do. So some of the slides I entered here for the beneficial of the audience here. So stock market is considered one of the high risk, high return. So risk is very high. Why? Is because if you don't know and put your money in a highly geared company or a badly managed organization, we would have seen in the past there had been companies that was liquidated and closed down. So you will lose your money there. So I'll start, since you all are wondering what is this guy talking numbers, now I'm making a little bit interested. For example, you will see in 2020 there was a company called Expo Lanka. That share was just 4 rupees. Just 4 rupees. So you have to look at the fundamentals of a company before investing. So this share, if you bought 1 million shares, I'm just giving you an example, right? If you bought 1 million shares at 4, what is the total investment? Anybody like to say 1 million shares? 4 million, right? So 1 million into 4. So this share goes to 400 rupees within a period of 1.5 years. No, Dirushi, am I right? 1.5, yeah. So 1.5 to 2 years, this share goes to 400. So if you have invested 4 million there, it becomes 400 million if you had the patience to hold on to the ride. So that is the benefit that you get if you can hold on to the stock. Sometimes people like to buy and sell and make quick profits. But if you can hold the long run, yes. Then the other one that I would like to say is, if you know this picture, Warren Buffett, I think most of you all know who is he. So what Warren Buffett says, if you are coming to the stock market, sound investing can make you very wealthy if you are not in a big hurry. So in stock market, you have to be cool. Now, just to share example, when I initially started, when I just after A-levels coming to stock market, I worked for 2 organizations and I was always rushing. I think some of you all also in the stock market, when the market is going, you like to pick the stock. When it's crashing, you panic. I think in 2006 when bombs were going, I was trading in the stock market, and then the bomb goes somewhere in Maradona or somewhere, we all panic and we sell. But at that time, there was experienced investors where they picked up very value counters when the bomb goes, and next day, 2 days, market recovers, they sell and they make the profit. So you can't rush and do things. In Sri Lanka, if you see in 2008-9, I could remember me and one of my colleagues analyzed, and we bought Taj hotels at 9 rupees. So that was like 900,000, and the stock after the war went to 90 rupees. So that is where you are increasing your capital. We call in Sinhala use a word called pragdanya prasarana karagema. In English we call you increase your capital. So if you have put like 900,000, you may be having 90 million. So Expo, if you got in, you have made, but now there is different sentiment. So the stock that are in some period, stock becomes the favorite stock. Sometimes the stock becomes the bad stock. That is where we see in some social media, they will badmouth a particular stock or the management or a particular person with regard to when the stocks comes down. So Warren Buffett, just to say, Warren Buffett is also an investor who invests in the stock market, and his net worth is 108 billion US dollars. So I'm just comparing this figure with the Sri Lanka GDP. So Sri Lanka GDP is only 73 billion US dollars, and Warren Buffett's net worth, one individual stock market investor's network is much more larger than Sri Lanka whole GDP. So that is also one factor to consider. So who does not know about stock market? Stock market is a place where public limited companies, say for example Dialog, HMB, Commercial, Lanka IOC, so public limited companies are traded. So you have an online platform where you can buy and sell shares, and even with 10,000 rupees you can open a CDS account online. It's free. You can go to this CSC mobile app, very simple, and you just click the account and you can open the account. Within 2 days it's active. Then if you have some free time, if you're going for reading about stock market, one of the best books that I would recommend is to go through the Intelligent Investor book. Is a knowledgeable and well written book about investing in the stock market. So everybody talks about stock market. The main thing why I showed the macroeconomic slides initially is if the company is doing well. Now you would have seen IOC company, for making a little bit profits, they went to a massive billions of money, and the share price from like 40 went to that 200, 300 to that levels. But what happens is also some of the companies like in 2021 with the huge boom, we saw some of the stocks that went up on a huge rally kept on coming down drastically fast, where the investors lost a lot of money. That's because of the macroeconomic framework was not strong. That is where the interest rates, nobody believed that from single digit, I think borrowings was around 9% and FD rates were giving about 6. This shot up just like that T-bill rate for about 30 plus. The main reason why is because the country went for bankruptcy. So then the T-bill rate, now I think who has studied economics will know T-bill is considered as a lower risk instrument. But because of this country went bankrupt, it was considered as the highest risk instrument. So the interest rates also followed. Then the macroeconomic framework, then the demand and supply to a stock. Now I was explaining about the stock before for Expo, because the freight forwarding rates due to COVID they benefited and they made a lot of money. So IOC, I think some of us would have been in the petrol polling during the Aragale time, right? So when there was no petrol in CPC, right, some of the investors thought, who can supply petrol to Sri Lanka? So that was one and only IOC at that time. And then some of the investors, research companies analyzed and put reports saying, okay, this is the forecast, and IOC started to make super profits, and the share price from 40 went to 250 plus, which is also like you invested about 2 million, you would have had about 5 million, right? So continuously now we are seeing new competition coming in, so that's a different scenario. So what are the factors when we are investing stock market? We should know what is number one is the interest rates, then macroeconomy, government policies, then the political situation also. Now at one season we didn't have a president in the country. So then some investors were asking, why is my stocks not going up? So it will not go up because the political situation is not strong. So it's like a school, if the president is not there, if the principle is not there, there is no discipline. So you will not go and put your children there because there is no discipline. So like that, now gradually things are settling down. Then with dividend declaration, how much of dividend is being paid, you know, some of the stocks which is in the past record, you will see the dividend yield, the dividend amount that they are paying, you can check from there, and foreign investment. So if these things are happening, we will see stock market doing very well. So the simple theory is demand and supply theory. So more demand comes, that's what I'm explaining continuously, like to get it to the mind that money from FDs will come to the stock market. That is what we are expecting. When the monies are coming, now currently we see 5 million, 10 million, 20 million, those amounts are coming. So as soon as they come, they look at what are the stocks to buy and they start buying the stock. So then that is where we see the demand increase. So when the supply is less now, people who was there to sell, like few weeks back, there are a lot of people to sell banks and all, now no bank selling as well. So when there is no selling and the demand is high, prices will move. So two types of return stock market some of you all must be knowing. For the benefit of others, main returns that you get is capital gain. That means, for example, say you buy, the example I told you initially, you buy a stock and sell at a higher price, you get a capital gain. And dividends is where so the companies, when they receive a profit, distributed to the shareholders. So this is another slide I want to share. During lockdown period, commercial bank came to 50 rupees. One of my clients, we were discussing, and a large amount of stocks were purchased by the client totally based on net assets per share. So I'll just explain that a little. So net assets per share is like, for example, we say, okay, some commercial bank 125 net assets per share. So you can just, anybody can go to www.csc.lk, stock exchange website, and look at their financials. It's just their NAV. So if it's 120 and trading at 50, it's a massive discount. It's like your own phone with you. It's valued at 100,000 and somebody is selling the same model at a lower rate at 20,000. Definitely you can buy and give it at 40. So that kind of thing happened in 2020, and this share moved. If you saw 52 bought, and if you collected value counters based on NAV 5.2, you will get a profit of 4.9. You would have a return of 94%. So that is what we are seeing. Some of the investors who have got into the banking counters these days, that they are already on profit. Then for the benefit for some of you all to understand what is dividend yield, like dividend yield is the percentage of profits is distributed to the shareholders. Now you see some of the companies are offering 15%, 18% dividend. Then you have to compare with your FD rate. If your FD, some of the banks are offering about 11, but if the company is giving you a 18% return on your shares that are invested, might as well put your money into the particular stock. Then do's and don'ts in the stock market. So why stock market is, you have to be very knowledgeable and not to panic when the market is coming down. You have to be very cool and collect the value counters. That is why the rich becomes rich, poor becomes poor, because poor keeps selling when they panic, rich keeps the mind cool and keep collecting. How? Learn how to look at company valuation. So I taught you all like just two basic principles. One is the NAV and the PE. So billions of money will come into your pocket without even you putting a effort. You will see now in future who has already had kept on holding to their stocks without selling. I met a gentleman on the way. He noticed me and he spoke to me, and to see he's one of my MasterMind followers. So he asked, "You're holding your stock?" I said, "Yes, I'm holding." He's also holding the stock. So some have already held the stock and some have averaged it also. So the beauty of it is the people who understand these principles have held on to stocks. But people who didn't understand, they have sold it at a loss, or else they have bought on margin. We call that, say, if you get 1 million, you can buy another 2 million, sometimes on credit. And if you are unable to pay that, the particular firm will force sell it, and then you will lose all your money. So you have to be very vigilant when you are investing in the market with discipline. I'll run through what are the main do's in your invest in the stock market. These are the things that you should do if you want to be successful? Number one, I explained macroeconomic framework. Number two, portfolio diversification. Some people go and buy, investors buy only one stock. Don't do that. We have to look at least, I use a principle called 3 to 5 principle. In Sinhala I call Tunapaha rule. So for you to remember, Tunapaha is stocks, 3 stocks or 5 stocks. So diversification, one is into maybe banking, one is to energy, one is to healthcare, like that. There are many sectors that you can go into portfolio diversification. Next one, doing most important thing, individual company self-analysis. If you are not a financial person, you don't have to worry. You can just look at some ratios like what I said, NAV and dividend yield. Another one I will talk about, PE ratio. Those 3, if you look as a basic 3 principles, it's sufficient. Then we talk about demand and supply theory I mentioned. Then read investment related books I mentioned. Then you can watch videos. So at this end of the presentation, I'm not going to show all the videos. I'll share the slides with Randhika, Board of Officials. They can share the slides with you all and you all can learn further. There are a lot of interesting videos that you can watch. And always talk to somebody more knowledgeable than you, like having a mentor or somebody is always good before you do. And don'ts, follow a friend and buy a stock. Your friend will meet maybe somewhere in a forum and having a drink and say, Machan, this stock is going, go and buy this killer. So you don't look at the fundamentals, you just buy it, and when you lose the money, you will go and blame your friend. This fellow is like this, he told me to buy this stock and now I made losses. And that. Then also SM, social media, some of the WhatsApp groups and all is also another danger factor that we will see, because I think Security Exchange Commission is monitoring all of these WhatsApp groups and Twitter and all, YouTube and all these accounts. So some people will buy the stock. Just for your information, what they do is they will buy the stock and keep promoting to buy their stock. For example, XYZ limited stock, keep buying. Now this is good, this is going to happen, this is going to happen. Very unethical way of promoting. So the innocent retailers, what they'll do is they will go and purchase this stock and their money will get ruined. Then more speculation. Then next one, buy stocks without knowing the company financials and buy on stories. Then how to select the best stock? NAV. Next one is the PE ratio. So PE ratio is just to simple calculation. We look at the market PE ratio. So if the market PE ratio is 5, any stock, any company, say John Keel's or Sampath Bank or Commercial Bank, if the PE ratio is below 5, it's an attractive stock. So before the debt restructuring announcement, if you look at the banking sector, it is was considered as one of the most undervalued sector, because the NAV of the banks were very high, but the trading price was very low, and people collected. And the PE ratio was also very attractive. And currently we see still there are attractive companies in the market. And some of the controversial, I don't want to mention the stock names, they must know some of the controversial stocks which people talk about a lot of negativity. Now we are seeing huge buying, and they are in the top 5 turnover as well, if you look at the stocks. Then the dividend yield I mentioned. So there are some more ratios. If you want to go profit sharing, earnings per share, price to book value, gearing, and so many ratios, you can go into detail. But those 3 at least, if you are going into, it's reasonable. And next one is sectors. You can decide what are the sectors you like to go into. One of the main sectors, we talk about energy, banking, finance, capital goods, diversification. So there are so many 20 sectors for you to choose from. So a lot of things for you to do as homework as well if you're going to invest. Then analysis of key financial statements. You look at the income statement. Now, even you're putting a FD, or a friend comes and tell to invest in his business, or stock market guy says buy this stock, just look at the income statement at least to see whether the company is making a profit or not. So some of the worst things that we see is people don't look at it. Companies are making losses, and you must be knowing some of the companies are also delisted because they are not submitted financial statements. So if the company is making profit, is fine, but look at the ratios. Then balance sheet shows the position, and the cash flow will show the strength of the company. You can always visit www.csc.lk, and you can it's freely available. You can just go and get the numbers. And the most important thing, how much should I invest in the stock market? This is the common question. A lot of people take the full retirement money and go and sometimes put in a financial institute, or they will go and put in a pyramid scheme and lose their money. And we see even though central bank educates the public, people are unaware of these investments and they lose all their money. So always keep your money safe. That is the best thing. So fixed income versus equity. So you have to have this mix. For example, very easy calculation you all can do. You can see how much of money you can put into the stock market. So why they say if you are little above 40, right, less proportion, and if you are young, you can put a larger proportion, because now for example 2020 people invested in the stock market, 21 they invested. Then for example for about 2 years people didn't make much money because the macroeconomic framework was not strong. But now again people will start making money and recover in their losses, and also profits they will start making. But the time for them to grow and make their money, you have to have time. It's like a tree. You can't plant a mango tree tomorrow and expect fruits from the next month, right? So you have to give time for the tree, otherwise you will cut the tree, you will chop the tree, you will start scolding the person who bought the tree and gave. So it's not like that. You have to allow it to grow. So simple theory is 100. Take the number 100, reduce your age. So 100 minus your age, that's the percentage that you can invest in the stock market. So don't go above that. So if it comes, for example, now this ratio I have taken 30-70s, but if you take the other way around, if you are, we'll assume we are 70 years old today, right? So you can invest only 30% of your money. So if you have 10 million, you can put only stock market 3 million, not more than that. Because you will not, some of the youngsters, even I have gone through when I was young, when you put all the money on the market, you don't fall asleep, right? You are wondering what's going to happen to the money, whether the market is going to rise or it's going to crash. But through maturity, through my experience, I have seen, I have told people, when they come, some people say, I have 50 million, I want to put all the money in the stock market. I said, no, you can't put all there. Go home and look at your ratios and come back. So you have a diluted investment portfolio. Otherwise, you put all the money in the stock market, and if it gets wiped off, it's gone. So remember, high risk, high return instrument. So then if you're looking at equity portfolio, you can look at these ratios. And as I said, there is these videos. Anybody has watched Boiler Room movie here? Nobody watched Boiler Room? Wolves of Wall Street? Can I see a raise of hands at least? Great. So Wolves of Wall Street is the best example. I have been in the Wolves of Wall Street situation in 2012 to 14. So some people will go and check my CV where I was, but that's a different story, right? It's a different market. You cannot play that in Sri Lanka market. You cannot go long way. It's not suitable. But Wolves of Wall Street gives you good sides and bad sides. So how people can take you to a wrong side, right? And the bad sides. Then the Wolves of Wall Street, another one you can look at is how he pitches the investor. So those are things that you can learn, and especially Boiler Room is also a good. Vin Diesel is there. I think he's one of his initial movies, who is now acting as the Fast and Furious movie. So if you can watch that movies, those are good. Then there's another movie called Margin Call. Those are some good ones. So these names are there. If you like, you can take a picture and watch these. Movies are always nice, because those days our parents used to tell to watch, read books and all. But now, books time is gone. So movies tells you a lot of story. Wolves of Wall Street, Margin Call, Wizard of Lies is a nice, beautiful one. In Sri Lanka also there is a lot of Wizards of Lies. I don't want to mention names, but there are many people like that. Sri Lanka, overseas, all over we find these Wizards of Lies. They will frame stories and keep telling the same story every day, morning, evening, night. And if you get caught for that, you will be trapped. Then Pursuit of Happiness is another nice movie. I don't know, have anybody watched Pursuit of Happiness? Will Smith acts in this movie, how he comes to be a stockbroker and his son acts in that. And then these are the books. The Rich Dad Poor Dad is a common book, like many of us have read. If you like, I have done a video on this, about 10 minutes video, that is in my MasterMind Roshan YouTube channel, so you can watch that when you're free. And I invite you, if you have your phones, you take your smartphone and just search for MasterMind Roshan. You will find MasterMind Roshan YouTube channel. You can log in and watch all the videos. And I should also thank some of the MasterMind followers, few of them are here and they spoke to me. So I was actually very proud to see their faces here. And I spoke to Randika also that I'm happy to see a big crowd here, especially when I was in Centennial also, we used to get this crowd, some meetings a little less, no Dinesh, but I'm very happy to see the progress on your first meeting. A good crowd has turned up and a very interesting and timely topic that you all have chosen, especially when interest rates are coming down, stock markets are booming and everybody will have questions on this. So once again, good choice, Rotary Club Centennial, Randika and team, and all of you all being here. So you can follow me on these pages, YouTube fan page, LinkedIn, Twitter, and a new generation, if you all in TikTok also, my team has opened accounts. So to finish it off, stock market is designed to transfer money from the active to the patient. So you have to be very patient in the stock market. And I want to thank you once again for Colombo Centennial for inviting me today and having this very truthful session. Thank you all of you, and I'll maybe answer your questions during the Q&A. All the best.
Like you said, we had invested in Expo Lanka, that after 1.5 years, 2 years, we would have got a better return. Same thing about 20-30 years ago, people started buying shares in plantation, but now it has come down. So this is a cycle, I think, going up and down. It's a curve. So you must hit the right time to buy and hit the right time to sell, I think. So that is a study, and you must, as he said, sometimes the company accounts are window dressed. So is there any way of tackling, finding out those situations?
Yeah, so window dressing thing is always some people could talk about it, but it's always better to be open and just go to csc.lk and look at the financial statements. If you feel anything fishy, you can always complain to them. But what we are looking here is like most probably we are looking at overall the positive impact. So how are we going to make money? Like rightly what you said, a lot of people made a lot of money from the plantation sector way back. So what happens is now Expo Lanka was an example of where we saw opportunity. So the investor should see, okay, this is going to be favorable. Now there are some investors are looking into hotel counters because they are expecting, okay, tourism could come. But how fast that the hotels can be profitable, and the NAVs and the PEs always have to be attractive. So when Expo went from 4 to 400, what happened was their profitability, like this was making about 1 billion rupee profit per the year. They started to make about 12-20 billion profit per the spot. So that gives a huge valuation impact. So if you can forecast, we call them growth stocks. I think Tesla is also one of the examples if you take overseas. Yesterday I had a chat with one of the Sri Lankan top businessman's son. He had a discussion with me. He said he was in USA and he made a thumping money in Tesla. And the graduation in USA, what he has done is he has given a treat for the parents, it seems, from the profit. He's just 22 years old from the Tesla profit. So you can imagine, you know, if you look at the proper growth stock at an early stage, and he didn't put big money as well. It's like an amount that you can manage. Now, some people, I said that they might go and put all their money and then they don't fall asleep in the night. So if you're putting, look at a growth stock and identify it early and have about 5 stocks which you diversify and put an amount that you are comfortable with. And then things will just, you will see the benefits actually in about sometimes 2-3 years. Sometimes you will see another few more months and maybe most probably months. All the social media will talk about stock market. Everybody will be stock market gurus and talking about this stock is going, I bought this, and everybody will talk. That happened in 2020, latter part with the COVID and all, lot of social media, a lot of people were talking about stock market. That will happen and a trend will go. I think few months back we saw that people in pyramid scheme, on Max DT or this kind of stuff, people were making money and they were talking. But so when you compare with those kind of pyramid schemes, you are looking at a stock market is quite open, because as people might say, okay, cook the books and all this stuff, but it's csc.lk, it's available. So you can go and always question the authorities. And
csc.com is publishing what the company has given.
Yes, that's right.
They don't scrutinize.
Yeah, so they have published rights there, and then we have the what you call KPMG or Ernst & Young or that kind of auditors are there. So you can always question them on that part.
In USA, some time ago, Enron came down and the Arthur Andersen company, audit firm had to be closed down because they were not, but they did not audit the Enron company and they were hiding some expenses in a balance sheet account. So what you're telling is not to put all the eggs in one basket. And if you can enlighten us, how has Expo Lanka increased their revenue, from which area, from what they were there 1.5 years ago, and what is the new business that they have gone in?
There was somebody called Harshat Mehta in India a long time back. He grew up with a scam and everyone knows about it. The guru of stock exchange. Can Sri Lanka have a person of that nature coming in, and is there any counter CSCs making to do that kind of thing? Anything can happen.
Yeah, I am not into astrology. A lot of people expect in stock market to be astrologists. No, really. Sometimes, they ask this stuff. Yeah. So those things can happen. I will not say no. Those things can happen. So we are into where we can, look at the company and financial and say, okay, this stock is valued, but these external things can happen. Even the last time the bull rally that happened, we saw many people were warned by Securities Exchange Commission not to do this, and as well as the names were published as well. Now the new system is in the website, and some articles I've seen, they publish the names who you think that it's coming to that level, they openly publish so that the public is aware of that.